What's up, guys? Today, I wanted to discuss how we see kind of newer retail investors really misusing valuation metrics, and we'll just jump right into it. So, obviously, the big stock people talk about when being overvalued and this and that is Palantir. We haven't really touched Palantir, but just want to talk about or use it as like the perfect example of how we can better use these metrics to interpret what people or what smart institutional guys are, where they're allocating capital and what they're expecting versus just if a company's overvalued, undervalued, this and that. So we've seen lots of people look at Palantir, whether it's the 624p, we see a $300 billion plus market cap with only $500 million in net income. And they just automatically try to short sell it. And then, I mean, if you follow Palantir at all, you know that that's never turned out well for anybody really over the long term. So this is how we can really correctly use these metrics as we've progressed as the markets have progressed. So when looking at like a PE, instead of thinking, okay, this is overvalued, no, it might be, but what we can think is, okay, there is massive amounts of growth, and Palantir is expected to earn massive amounts or way more money than they are right now. And that's already been priced in. Institutions and big players are expecting insane amounts of growth for this stock. So what we can interpret that as is if you are bullish on Palantir, even at these prices, you are expecting it to become a top 10 company in the world. Because, I mean, listen, we know they have those, the running systems for big corporations. We know they have that government defense deal, things like that. But in saying that, when using like a PE or even a P growth, we have to be careful with the PE growth because that involves analyst expected growth projections, which, again, analysts are far from being always right. So you want to be really careful with that. But as we can see, I mean, by far and away, in terms of $100 billion plus companies, by far and away the highest PE, and people just assume it's overvalued. Again, might be. But what we can see is that growth is expected and that growth has been priced in. So with companies like this, that with so much growth being expected and with such a high beta with being so volatile, we always suggest that at this point you stay away. I mean, if you got in early at $20, $5, whatever it may be, even $60, go ahead. If you're bullish, you can go ahead and hold it. But these metrics don't just mean you can't just take them and assume. None of these the people that move the markets, the market makers, the institutions, they're not idiots. They're not just buying Palantir for no reason. This is not a meme stock, anything like that. So, I mean, even Tesla's a decently high PE, but we just saw, with their new robo taxis and all things like this, and they're expected to be a game changer down the road, and constantly. Them and Palantir, both, just state of the art, ahead of everyone in tech. So, again, we can take this as this is what might be expected. So, in that case, you have to be really, really careful when you touch these stocks, and you have to be really, really careful with how you use metrics, because in any of these situations, any of these stocks with high PEs. People will assume things. They'll think, oh, this people are stupid. Why are they buying a stock at 100? Like even AMD right now, it's been getting hammered the past year, but it's having a great month right now. That's actually on our paid watch list, by the way. But just to assume based off a PE or any retail metric that a stock is over or undervalued, you have to take a deeper dive in it, and it can tell you, okay, what is expected, and it can just paint the bigger picture, just tell you what's I don't keep saying it, but tell you what's expected. Not even though this is the current PE, because if people are expecting Palantir to maintain this earnings, to maintain the same amount of earnings, I mean, yeah, no one would be buying it at these prices. No one would be. It'd be stupid. So that's why we recommend people be very careful if they ever want to short sell. if you sell a stock short, you have to look way beyond just a chart, just metrics. You have to have loads of confluences, and I mean, just looking like a P or anything like this, or even income, it's there's so many things priced in that we don't know about, and you have to be aware of that. So that's today's topic. We're gonna go into more about um, how to use these valuation metrics correctly, and yeah, just again, having a stock with good fundamentals is great, but just because fundamentals may not be there does not mean it's going to move one way or the other. So that's it for today, guys. Thanks for watching, and yeah.